Remember, in crypto markets, as in any markets, the trend is always your friend. You need to determine which direction prices are moving in order to put in appropriate buy and sell orders. Now, mistakes will be made when buying and selling, but it's professionals and better traders that are able to quickly correct those mistakes in order to profit in the long run. So let's begin by talking about a couple moving averages. And what are they? Basically, they help you identify which direction the market is moving. The first consideration is what time period should you choose? Now, I prefer using the time period that are chosen by most market participants because then I know everyone's looking at the same signal. And in this case, I'll use a 20 period, a 50 period, and a 200 period moving average. The second consideration is moving average convergence divergence. And what does that mean? And basically, these moving averages tend to move away from each other or move closer to each other over time. And you'll see sometimes when they cross, that can give us a buy or sell signal. So let's look at some charts right now and get into it. So here's a chart of Bitcoin versus the US dollar. Each candlestick represents 1 day's worth of data, and this is on the Coinbase exchange. Now you'll notice not only do I have these candlesticks, but there's these squiggly lines as well. And what these are represent exponential moving averages, and that's what the EMA stands for. Now, I like using the exponential moving average because it gives a higher weight to prices that are closer to that specific candle. And in this case, I've chosen 3 different time frames. The blue line is the 20-day EMA, the orange line is the 50-day EMA, and the pink line is the 200-day EMA. Now, in an uptrend, these moving averages can give us an indication of where support is. So once this price trend is above this moving average, if it pulls back to the 20-day, that can be a weak support. If it pulls back to the 50-day, this can be stronger support. And then the 200-day moving average should serve as the strongest level of support. What you'll notice about moving averages is even though I'm applying them here to a 1 day's time frame, you can use them in shorter time intervals as well. Now, this chart is Bitcoin versus the dollar in 240 minutes, so this represents 4 hours of time per candlestick, and this is on the Coinbase exchange. And here I've identified the 20-period exponential moving average and the 50-period exponential moving average, the 50 and the 20-day. And what I want to show you here is that at one point in this price history, the 20-day time period crossed over the 50-day time period. So the blue line essentially moved below the 50 period. And when this happens, it signifies the price trend has changed. So if you were to sell Bitcoin here at, let's say, a price of 15,000, you'll notice that once this price moving average, the 20 period went below the 50 period, the prices continued lower for a considerable amount of time. In fact, the price didn't really bottom until 6,000. So Bitcoin went from 15,000 to 6,000 on this. I also want you to notice that if you're selling short Bitcoin, which means you're profiting as it's going down, the best times to buy are when these moving averages really diverge from one another. So when the 20-period moving average diverged, see this difference in these 2 lines right here? This was a good place to take profits. Same thing at 6,000. When you see a big divergence in these moving averages, if you're short, you want to take profits. On the flip side, you can see the uptrend has started to resume a little bit lately because the 20-period moving average, remember the blue line, crossed back above the 50-period moving average. So now this is signifying that prices are trending higher. Now another chart of Bitcoin versus the US dollar on a 15-minute time interval, I just want to show you how these same exponential moving averages can be applied to daily charts, to 4-hour charts, and also 15-minute charts. Same thing here. You see this cross where the 20-period moving average drops below the 50, and this signifies that the trend has changed. So the trend was moving up as the blue line was above the yellow line, and then it crossed over and prices dropped significantly. The price here on Bitcoin when this cross happened was about 11,500, and then it dropped all the way down to about 10,000. So you saw about a 15% drop in just a couple of days. Here's a chart of Ethereum versus the US dollar, and this is a 1-day time frame. So each candlestick, remember, represents 1 day of price changes. This is on the Coinbase exchange. Now I've signified the different moving averages, the 20-period moving average, the 50, and the 200 exponential moving averages. And you also notice here how the 20-period during this uptrend served as support for Ethereum. So each time Ethereum sold off, it touched this exponential, this 20-period moving average and bounced higher. The few times that it dropped below to the 200-period moving average, now these are great times to buy in this uptrend because you had a price drop that fell from 500 here to about 200 here, so it dropped more than 50% and then rebounded back to 400 or 500. Same thing in this price drop, the 200-period moving average. It dropped all the way down to 200 and then bounced back, and then Ethereum took off and rallied up to 1400. Now just keep in mind, these not necessarily are these predictive, but they're just really informative. They're just a way for you to analyze the market and think about where are places that you should buy and sell these different crypto assets. Here's another chart of Ethereum versus the US dollar. Again, it's a one-day candle formation on Coinbase. I've identified these three different exponential moving averages, the 20, the 50, and the 200. And what we're looking at here is just a closer look at the times Ethereum dropped to this 200-period moving average, which signified strong support. In fact, there are only 3 times during this time frame, so in 6 months, that Ethereum dropped to 200-period moving average. And each of those times, you saw a significant bounce in Ethereum. So it bounced right off that 200-period moving average every single time. Here's another chart of Ethereum versus the US dollar. Now 240 means 240 minutes, or about 4 hours. And this is on the Coinbase exchange. And I'm looking at here 20-period exponential moving average versus 50. And I've got a bunch of crosses here going on. I've got a cross of the 20 above the 50 here at a price level about 750, which took Ethereum up to a price level of 1400, so you saw a double. Again, you see how this moving average started in a tight range, but then it diverged. And once these prices start to diverge and they get really wide, this is indicative of a place you want to hit the sell button if you're long. On the flip side, the price drop happened and the 20-period moving average dropped below the 50, and this move in Ethereum continued for a couple weeks here, where it was weaker because the 20-period was below the 50-period, which is indicative of a downtrend. You saw a really sharp cross here in early February where the 20-period moved below the 50-period. Remember, the 20-period is the blue, 50 is the orange. Prices dropped significantly, and you saw the price of Ethereum versus the dollar drop from 1,100 all the way down to 550. So you're looking at a 50% price drop as that moving average crossed. And more recently, you've seen the moving average kind of turn higher and then back down again. So the last chart here is Ethereum versus US dollar, and this is the 15-minute price chart. So this is shorter time frames, but you'll see that these crosses on these exponential moving averages still hold up over different time frames. So you can apply this technique not only to your daily charts, but also something really short if you want to be a day trader or trade the prices in the real short term. You've got a cross here at 970, which took the price back down to 910 in the same day. And if you were trading this divergence here and you had shorted Ethereum, now this is where you want to start buying back when the price trend of the 20-period average diverges from the 50. And you saw another one of these divergences or crossovers happen right here at 950, and then prices of Ethereum dropped all the way down to 820. So this happened in just a few hours. So there you have it. You can see how these moving averages and their convergence and divergence and crossovers can be applied not just to daily charts, but many different time frames. And always remember that technical analysis is not predictive, but it's informative.